Well, good evening. So I wanted to bring to you a case study sort of that I'm working on right now. It's fairly fresh. It actually came in today, was an inquiry from someone, and I wanted to talk through how this works. So a lot of times what I'm talking to you all about is the ability to start a commercial loan brokerage where you are a connector between borrowers and lenders, and you can get paid very handsomely for doing that. Just last month, I closed a million, 1.1, $1.2 million deal and got a nice hefty check for that time. And doesn't take a ton of effort to do if you're really good at this and if you've been doing it for a very long time. But a lot of people, or not a lot, but a fair number of people want to eventually graduate past just being a connector between lender and borrower and actually lend out their own money. And I get it. If you think about your skyline in any major city, you're going to realize that most of the large buildings have a bank name on them. Why am I pointing that out? Well, because lending is an extremely profitable business if you know what you're doing. It's not easy if you don't know how to underwrite risk very well. And that's really where lenders come make their money. They're experts at underwriting risk and getting paid back. In fact, that's the difference between lenders and investors. Lenders get paid back through regular payments. Investors get paid back when a company doesn't exit or is acquired, something like that. So part of an evolution for a fair number of loan brokers, I keep saying a lot, that makes it sound like it's more than it is. It's not. But a fair number of loan brokers, an evolution for them is to eventually get to the place where they're managing a pool of money and they're lending it out themselves and they get to make the return. So I haven't talked about that often as it relates to being a commercial loan broker. And I just kind of wanted to share how that works briefly so that if this is something you're considering, you'll have an idea. So first of all, you have to be comfortable managing other people's money. You're going to actually have a fund, much like a hedge fund for an investor, where they gather pools of people's money and then they invest it on their behalf. As a lender, you're really doing the same thing. You're just not investing in individual stocks. You're investing in loans that are made to people. So you're going to be managing other people's money, pulling people's money together, and then lending that money out. So first of all, you just have to feel comfortable with the idea of managing other people's money and living up to the expectations of what they have. Why would someone give you money to lend out? Well, in today's environment, they may not, but in the future, they might. And what I mean by that is we're about to see rates come down. It's September of 2024. It's almost September of 2024, and we fully expect at least some sort of rate reduction. As it's been for a while, your average investor can go out and get a 4 or 5% return on their money with almost zero risk, nothing zero risk, but almost zero risk in treasuries and things like that, or CDs. Well, as rates come down, investors start looking for opportunities to earn higher yields. And one of the places that they do is investing that money in startups is a great place. And they may even be looking to, if they're sophisticated enough, lend out money. And so as a broker who's going to be lending out your own money or other people's money, your own fund, you have to be comfortable with this idea of managing their money and then getting them the type of return that they expect. If they could just put the money they're going to give you in a treasury or a CD and get 4 or 5% with almost zero risk, you're going to have to give them a better return for them to take that risk with you. So you should be looking at 8, 10, 12, even more of a return return for an investor. You have to be comfortable with that. But it's not just about investing their money. The other thing you need to think through is you're going to have to underwrite that risk. What I mean by that, when you're a broker, I just connect lenders to borrowers. Now, because I've done this for so long and I have been a lender before and I know how to underwrite, I know what kind of risk the lender could be taking on. But even because of that, the lenders are still going to make their own assessment of the risk. So the deal I just closed, $1.1, $1.2 million, even though I had underwritten the whole thing and showed the lender all the risks that I thought would be associated with it, they still did their own analysis. And so as a lender of other people's money, as a fund manager, you're going to have to underwrite deals because you're the one doing the lending. Not only that, but you have to make the other decision, which is, are you going to service your own loans? So as a direct lender yourself, are you going to collect payments from people? What are the mechanisms in which you're going to do that? How are you going to collect those payments? You're going to take checks and then turn around and deposit them at the bank? Or are you going to take direct payments through some sort of ACH? You're going to take a wire? Like, how are you going to collect your payments? It's not just as simple as you're going to collect payments. It's how that money's going to get to you. There's going to be fees associated with moving that money to you. So you have to think about the underwriting. You have to think about collecting the payments. You have to think about servicing the loan. What happens when a borrower wants to update their address? What happens when they want to make an extra payment? What happens if they want to pay off your loan? There's all these things that come with being a direct lender. And it's not just as simple as making loans and lending out your own money. Now, can you subservice those things to another party? There's all kinds of third-party companies out there that if you don't want to do all of those activities, they'll do them on your behalf, even the underwriting. But if you do that, now you're going to have extra fees or expenses you're going to be paying out to a third party to do those things. So now the return that you have to get for your investors has to be even higher because you have more expenses than you would have. So without going on and on about this, what I'm trying to relay to you is it's not just as simple as becoming your own lender. There's certain certifications you need to think about to manage a fund. There is raising that fund. Then there's deploying the money in that fund. And then when you're out of money, then you have to raise another round, just like a venture capitalist has to do, and then deploy that money. You have to service the loans you've made in the first place and collect payments and change addresses and hunt down collection accounts and do all these things that you have to do. So that is why, candidly, my model has always been just to be a broker. Could I make more money if I managed a fund of my own? Probably. But as a business model decision, it's just too much headache that I really don't want to deal with. And I'm happy making the money that I make just being a connector between deals. That said, if it's something you're interested in, like Jay, who just reached out to me today, I'll be happy to connect with you and talk to you about what that looks like. I have helped people set up funds like that before, specifically the part about underwriting. So I have set up and created underwriting procedures and processes for funds that have started before because of my lending background. So if that intrigues you, drop a note in the comments. I'll be happy to answer questions that you may have. But just know that it's not as simple as creating the fund. That's a hard step, getting the money together to be able to lend out in the first place. But also all the other things that come with it. And so if you don't have that experience, it's not something to enter into lightly. It could be worth it just continuing to be a broker yourself and still make a hefty commission. All right. Hope that helps. Have a great day.